Welcome to another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We're going to take a look at this recovery. You know, most times we call it a turnaround Tuesday. We definitely were able to call it a turnaround Friday as we wrapped up the last full trading week of 2024. We're also going to look at some solid trade, what we're seeing on this week's numbers, and where do we go from here? What happens if you still have that old crop? Come on. We know a few of you still do. We'll be back to take a look at that and a whole lot more in this week's episode right after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. As you can see, joining me is going to be Darin Fessler today. Darin is with Lakefront Futures. And wow, what a week. You know, we started out the week and I think there was a lot of fears, some struggles as we looked at the market, knowing this was the last full trading week of 2024 with the holiday the next 2 weeks. Did you ever think the struggles we saw at the beginning of the week would just be a polar opposite come Friday?
There's a lot of things that shook up this week. I think that you've seen really a lot of the bearishness come into play after the Fed's comments this week, and then really the bullishness that that really turned the corner here as we ended the week here. So again, when we look at just simply the fundamentals here, the corn market seems to be still the leader of the pack here. A really strong demand story. You have spread action that continues to be pretty bullish. And then you have a bean market that is just complete 180 of corn at the moment. But are we getting some traction there? Is the concerns maybe starting to, okay, yes, we've maybe calculated for the Brazil, but are we calculating for maybe that potential dryness 30 and 45 days out from now in parts of Argentina? I think that's a big question the market's trying to look for in here. And we had a nice little turnaround in the equities over the last couple of days as well.
You know, the stock market, sure, I think kept everybody on edge when we had the Fed discussion happening on Wednesday and just watching to see where that was going to finish out.
Yeah, I mean, if you trade the bonds, and we trade a fair bit of them, the bond market to me, it's screaming that it's telling the Fed, or it will force the Fed to stop lowering rates here. And at the same time, the Fed's trying to lower rates. You see the 2, 5, 10, and 30 years yields just continue to skyrocket. And so, again, I think that has some big indicators of what may happen with the U.S. dollar. And I think the story we don't talk about a lot is the Brazilian real. And how the Brazilian real which is obviously our big competitor when we talk for U.S. ag exports here, the real hit over a 630. So that means the dollar versus the real. So it's a comparison. Hit 630. So that's very, very high, record territory. So what has the Brazilian government done? They've tried to step in here, tried to support the real. I don't think it's going to work. I mean, it's brought the real down late this week, but again, it's going to have a huge implication when you get to that February, March, April timeframe, because Brazil right now is a lot more competitive on the exports for beans. Now, we'll know a little bit more about what that acreage looks like for their safrinha corn crop, but if that happens and we don't have any weather or demand starts to falter, I think there's a little bit of a pause or a caution for this corn market going out maybe to that next 3-6 months out from now.
You know, and as I talked midweek with Arlen Suderman, the stressing factor was Brazilian farmers, they're playing off the Chicago Board of Trade. So watching that differentiation between the real and the dollar has a big effect on their bottom line.
Oh, absolutely it does. I mean, the lower that real goes, theoretically, they're going to need much more bushels to make up for their loss of their own currency. Now, that may seem like a good thing for U.S. Hey, our dollar's stronger, but again, the higher the dollar, maybe less exports that we get as well. So it depends on what side of the equation you're on here. So yes, it might be good that the Brazilian real is lower and it can move the exports. But if you're a producer down there, you're going to need those bushels because it's not worth as much. So a very interesting thing that I think all producers must follow is the U.S. dollar versus real, or any type of central bank movements in that. I know we're talking a lot more geo macro events here, but these geo macro events, I think you've seen this earlier this week when you had the Fed come out here and their comments following how intertwined the financial markets are with the commodity markets and the equity market. Everything's intertwined. The point being, when there is fear, there is selling. And I think that's what you've seen earlier this week with the beans. There's maybe a realization, hey, Brazil's looking more like a 170 plus. And then you had the comments from the Fed. That really got the equity market selling off. Probably created a little bit of nervousness as well in the cattle market. And the cattle has been a screamer. You look at how the funds are long and feeders and fats and even the hogs. At what point do you say, hey, yes, the fundamentals are really strong, but at what point do you say also, gosh, there's probably some, either I would have really good margins, or if I bought feeders maybe at the wrong time, my margins are thin. When do I step in here and start protecting that? Because that's my fear. My fear is not that the fundamentals falter in a big way. I think they're going to be solid for some time. But given the length of the funds, that exit door, whenever they want to pull the rug out from underneath it, is only going to be so big. And so I'm just trying to manage some of those hedges. And we've been letting a lot of things ride, but just trying to manage that in a way that doesn't get blown us out to the upside. I just don't want a 2015 scenario like happened where we see a quick $20 off of this market, because that would not be good given where the cash prices are and probably the lack of guys hedging this market.
Well, we should come as no surprise, too, that trade was on the thinner side this week, knowing that next week is Christmas and the week after is New Year's.
Yeah, and it's going to be pretty much a thin trade the rest of the year, to be honest with you. I mean, I don't see, unless there's some huge headlines that come out, obviously the government issues, and we don't know how that's all going to pan out here come late Friday evening, but that could shake up some markets here when in thin trade. And so when you have a little bit of thin trade, some wild things can happen. So that's one headline we got to watch very closely here.
So what do we do with old crop bushels? You got to admit, we know there's people that have them out there.
Yes. From our standpoint, where we've been 85% sold here on corn for a little while. We've been fortunate enough just to, have some very early sales, letting that 15% run here. I think when you look at the spread action from March to May, March to July, the market's really not paying you a whole lot to store those bushels. And so I'm much more in the camp of let's try to move these bushels sooner rather than later. And then if you want to still be bullish this stuff or long this stuff, then reutilize it on or some ownership on some paper, being futures, calls, call spreads. Again, I think some of that on the bean side of things, though, boy, I think you get any sort of 50, 60, 70 cent rallies, and that's been the theme here for quite some time, is that these are rewarding opportunities, just given the backdrop of what potentially could happen in South America. Like I said, Brazil's looking like more and more like a 170 type crop. The question I have in South America is not Paraguay and Uruguay, it's Argentina. Those models on the Euro weeklies continue to show a little bit of dryness creeping into the Buenos Aires, Cordoba, and Santa Fe, the biggest producers in that country. So watch that closely, because the last couple of days has really got this meal market excited. A meal touching the 50-day EMA, that was probably providing some sort of support here for this bean market. Okay. But you look at this bean market sell-off, it was definitely oversold in the short term here in the last few days here. So to see a little bit of bounce back over the last couple of days, it should not be shocking to anyone.
So, there is a lot of thought too as well about acre numbers into 2025. And it's too early to say we're going to see a switch from beans to corn or vice versa. But we know that there's people out there having that discussion at this point.
Absolutely there is. I mean, when you ask producers, unless you're a strict rotation guy and say, I'm going to plant beans and I'm going to stick with my rotation regardless, I think you got to be looking at the profitability. And I think that's where a lot of guys are right now. If beans just cannot cash flow at these levels, I think it's going to push more and more to this corn acres. I'm using 93 million. And I might be a little light on that, but I think that's a fair number to utilize right now. I've had a lot of clients ask me, well, why are you at 93? And don't you think it could be 94, 95? And I'm like, it definitely could be. My rationale for my number is, given the decline in working capital over the last couple of years, you have to have the other side of the coin, the ag lenders, be willing enough to give the loans and the capital to plant corn. And I don't know if we have that willingness at these type of interest rates, especially if guys are a little bit, on edge or have a, really bad working capital look the last couple of years. I think that keeps corn acres maybe at bay, but again, when you look at new crop beans, new crop corn ratio, it definitely it's screaming more and more and more corn. And so, yeah, if you're up 4 or 5% more acres on corn, that's not going to be shocking. What's going to be shocking if you get a 95 million and no weather. Now that creates a scenario where, boy, even though old crop is pretty bullish and friendly, where I do think these carryout numbers come lower, if you don't have weather next summer, which nobody knows right now, boy, that could really, what turns really bullish could be kind of sour the mood a little bit.
So as we wrap up this week's report, let's talk about the strong numbers we saw in the cattle. I mean, 3 amazing weeks of cash movement, the weight, and nothing much happening this week. But in general, it's been an amazing run so far.
Amazing year. I mean, it's been really remarkable, to be honest with you. And what is the willingness of the buyer to continue is the bigger question. When do they get tired? And the fundamentals definitely warrant what's the type of moves we've been seeing. The fund's definitely been backing this by money flow. Again, the question is the macro picture. When do funds get tired? What issues or what swan events may linger? Who knows what the policy will really be after the inauguration? And I think that's where the concern for me for cattle lie.
All right. Sounds good. So much that we talked about today. I really appreciate you joining us, and I wish you and your family the merriest of Christmas, and enjoy the time with your kids, as their eyes, I'm sure, will be as big as saucers come Christmas Day.
Oh, absolutely. Thank you so much for everything this year, Susan. Merry Christmas.
Merry Christmas, Darin. Quick reminder to everybody, information on this show is provided for educational purposes and is not intended to influence legislation, government policy, or action. And as always, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. Have a great rest of your weekend as we head into 2 very busy holidays. That's been this week's edition of the Nebraska Soybean Board Weekly Market Roundup.